So we saw a lot of red in action yesterday. By the way, red and green. But the green's what we're going to talk about right now because we saw the corn market in positive territory. What about last night, though, in the overnight trade? Let's look. Again, as it settled in positive territory yesterday, but then moved lower overnight. December down a half penny, 406.5. We go to soybeans. Soybeans also were higher in the session yesterday, and they moved lower overnight, 9.90 3/4, down 3. What about the wheat market? Wheat has been higher for the last two sessions for both Chicago and Kansas City. September overnight, 5.18 1/4, and the hard red contracts were mostly higher, except for that front month at 5.21 1/4. Spring wheat was higher as well overnight. What about the cotton market? Cotton market's been lower two straight sessions, lower in the overnight. Dipped down below 66, but settled in that 66.05 range. Brian Hoops is president, Midwest Market Solutions. All right, so that's the overnight action. As we start to open here in 14 minutes, what will we be watching?
Hey, good morning, Tony. Yeah, our overnight rally seemingly has kind of stalled out in the corn market. We rallied up against broken support, 407.5. That became resistance on the rally. That kind of capped the rally yesterday and in the overnight. Beans have a similar situation. They broke resistance around 98.5, and that rally seems to have stalled just below that level of resistance. Now, there was a private sale again overnight of corn. Another sale, this time 125,000 metric tons to an unknown destination. So that provides minor support for the corn market. We've had a very good week of not only weekly export sales, but private sales. Last week we had the same situation. So we're seeing a trend here now that the market's near this $4 mark. We're seeing a lot better demand for our U.S. corn products. And as I mentioned yesterday morning, our new crop export corn sales pace is double that of a year ago. So off to a great start. Soybeans not off to a good start. We're not hearing any private export sale announcements. There's some sources that say soybeans are actually cheaper at the Gulf than what they are out of South America this time, but that's really not stimulating any demand, and China is notably absent. So this is about the time of the year where they start to buy U.S. products if they don't have enough South American supply to purchase. If they start to run out in August, September, or October, they start to buy U.S. new crop soybean products. We haven't seen them do any of that last year, didn't do anything this year as well. And so it may be a long time until we get any China buying of U.S. Products. So I think, market has a little tendency here into the weekend on a Friday to try and rally, put a little premium in, and then trade lower Sunday night into Monday. The weather forecasts really don't give us much hope for a sustained rally, so I think we're probably following that similar pattern again. Maybe some weekend hedge pressure, a little bit lower prices into Sunday night, and then ahead of Tuesday's WASDE report, which looks to be somewhat bearish with the increased yield potential for corn and soybeans.
Yeah, as we look at that WASDE, obviously we'll be watching to see what they do on corn and beans. What else will we be watching for in that WASDE?
Yeah, just going back to the corn and bean yield estimates, 8 out of the last 12 years, corn yields have increased in the WASDE report in August. 7 out of the last 12 years, soybean yields have increased in that report. So certainly that's going to be closely watched. And if you increase those yield numbers, you're probably going to increase ending stocks. The production numbers get bigger. Hopefully, USDA recognizes our strong export pace for new crop corn and keeps us at a strong export pace so that we keep our ending stocks reasonable, at least. Maybe under 2 billion bushels would be nice to see, at least in this report. There's also wheat production numbers coming out. They're expected to be down slightly from a month ago. Not really much of any changes as far as wheat ending stocks or wheat production.
All right, we'll take a quick break. Back with more. This is Market Day Report. 3, 4, 5. Yep, 5 straight sessions higher for live cattle, 5 straight sessions higher for feeder cattle. And how about we just keep ringing the bell? All-time highs. Look at what we did yesterday in that live cattle market. course, I'm acting like, hey, look what our football team did. Look what we did. I didn't do anything. I just watched it. And yesterday we watched August live cattle hit an all-time high of 239.47. Now, it backed off and settled at 293.15, but that's the mark to keep an eye on. Will we move above 239? Will we hit 239.50 today will be, I guess, one of the questions. Over on the feeder side, kept ringing that bell about every 20 or 30 minutes with a new all-time high. We set it yesterday in the September contract at 350.20. That's where we settled, up 597. Hogs go in the opposite direction, down 2 straight sessions. October at 90.90, down $1.07. Brian Hoops, Midwest Market Solutions, expectations for today?
Well, you would expect we're going to see some buying interest come into this cattle market once again. Now, you just have to look at the numbers from our futures where we closed in relation to the cash markets, and you have to wonder how far are we going to push this market. You look at your feeder cattle index, it's $9 discount to where the futures are. That's pretty, we haven't seen that for quite some time. And usually when you start talking about $8 to $12 premium like that, futures over the index, usually that brings in some selling to try and narrow up that index and the futures market. But you just don't want to really bet against this cattle market. I wouldn't be surprised to see us open lower and a little bit of correction here this morning. But there's plenty of buying interest. It seems like in the first few minutes of trade starts to come back into the futures. Our August live cattle, it's really paired up with last week's cash trade. In fact, it's above last week's cash trade, anticipating we're going to see stronger cash this week. And we certainly expect that we will. There's really hard to find any bids out there, but asking prices at least 238. A lot of places are 240 to 242 with this rally in the futures and the big jumps in the box beef this week. They're really digging in their heels and wanting better cash money, and they may get it this week. It doesn't appear that the consumers are really backing off of buying any U.S. beef purchases. And without the consumers backing off, their supplies are not increasing anymore. So it looks like, that market wants to continue just to push higher, especially when the money flows into this market almost all exclusively from the long side.
Well, buckle up. It's going to be an interesting day. Brian Hoops is with Midwest Market Solutions.